Good afternoon, everyone, and welcome back to another JYIC financial workshop. Today, we are very honored to have a very special guest speaker, Professor Sayuri Shirai. In today's session, we'll explore how central banks' monetary policy and fiscal policy influence the economy and financial market. This will help you better understand how policymakers think about economic conditions and how those decisions affect investors and markets. I believe this will be a very valuable opportunity for all of us. And Ren, can you introduce our guest speaker for today?
Yes, thank you, Kai, for the introduction. So today we have about 40 people, about up to 50 people, I think maximum joining us today. Originally, we do have over 1,000 people attending our competition and hundreds of teams. However, um, this invitation for this halfway call was only sent out to the teams that were in the uh, top certain amount of rankings that we were able to proceed with, and the teams that were consistently keeping up with the strategy uh, and point uh, forms. So those are the people that were invited to this call. So in the Q&A time, feel free to speak up and yep. So and so first of all, welcome to our Japan Youth Investment Competition midway session. Um, Today we have it's a great honor for me and Kai to introduce our distinguished guest speaker, Dr. Sayuri Shirai. And Dr. Shirai is one of the most respected economists in Japan, and she previously served as a policy board member at the Bank of Japan, where she played a key role in shaping Japan's monetary policy during an important period of country's economic recovery. Um, in addition to her work at the Bank of Japan, she has had an extensive academic career and currently a professor at Keio University, specializing in international finance and macroeconomic policy. Throughout her career, Dr. Shirai has contributed significantly to global discussions on monetary policy, financial stability, and economic growth. And her insights have been highly influential not only in Japan but internationally. So today it is my pleasure to have Sayuri Shirai in our call today. Dr. Shirai, the floor is yours. Thank you.
Okay. Hello, I'm Sayuri Shirai. I teach macroeconomics, but also I do a lot of policy works. So I often talk with a lot of Asian government, and lots of discussion with many international scholars. By the way, how much time do I have? 20 minutes or 30 minutes? My
We're
presentation time.
expecting about 30 minutes and a
Okay,
Q&A
okay.
session. Yeah.
So let me share my screen. Just a moment. Can you see?
Yes.
Okay, so I will talk about monetary policy, but nowadays, monetary policy and fiscal policies are closely related, especially in Japan. So it's a very complex issue, but you can try to ask me any question you have. So I try to simplify, but it's so complicated. So, but I will explain you what's happening right now. So before I talk about Japanese economy, I guess you know where the Japan stand. So this is I don't know how much knowledge you have in terms of economics, but when we look at economic size, usually we can look at nominal gross domestic product, sort of total goods and services produced within a country. So this is a projection from International Monetary Fund. So right now, the biggest economy, as everybody know, the United States, and then the United States GDP account for about 25% of global economy, and followed by China. China is growing, has grown quite fast in the past. So now China account for 16.7%. So together with the US and China, 40% of GDP. So right now, global economy is dominated by these two economies. Right now, Japan is ranked fourth, but I think sometime this year or next year, India will take over Japan. Okay, so this is a current situation. Let me give you example in terms of a sort of a average living standard. So this is a GDP divided by population. So this is a United States and Asia. The Singapore is very rich country, and US also quite wealthy. And now South Korea is growing much faster than Japan. So South Korea is fourth wealthy country and already exceeding Japan's case. So this is where Japan stands. Okay. So now I want to show you what's happening in the case of Japan. Before I talk about monetary policy, it's very important for you to understand Japan's economic policy. And after this, I'll also explain you what's happening in US. Why I have to talk about Japan and US? Because later I will talk about exchange rate. Exchange rate is very important. For example, US dollar right now equal to 159 yen. And this sharp depreciation of Japanese yen is closely associated with monetary policy. So I hope you you bear with me and ask me any question later, okay? So current exchange rate is closely associated with monetary policy. So I will try to explain what Bank of Japan is doing. And after that, I will explain you what Federal Reserve, the U.S. Central Bank is doing. But before that, you have to understand, Japan and the U.S. economy. So this is a Japan's case. What I show you here is real GDP. Real GDP means, total goods and services produced within a country, but excluding all price factors. So it's a real sense. Okay, so this is called real GDP. What I show you this here in this chart is the level of real GDP. So the COVID-19 pandemic, that started in 2020. So we can start 1 year before COVID-19 pandemics. So let's look at 2019. And then, to simplify the Japan's performance, I put real GDP. It's usually expressed in a Japanese yen, but I converted into index. So 2019, the real GDP level in Japan is converted into 100 in 2019. So this is a level. So let's start with 2019. And 2020, you can see this bold black line, the real GDP dropped. So this, because of the pandemics, a lot of activity stopped. So you see a decline in economic activity. But after that, economy started to recover. So you see a bold, this GDP line started to increase, but only slowly. The latest data is 2025. Then so this bold black line just managed to exceed 2019 level right now. So it took many years for Japan to recover the pre-COVID-19 pandemic's level, the real GDP. So in other words, Japanese economy is quite weak and sluggish, and you can see from this chart. Then I also show you the domestic demand component. So red is showing household consumption. And household consumption also dropped during pandemics. It started to increase, but very sluggishly. And still, as of 2025, this level of consumption is slightly below 2019. The capital spending in the capital spending is a corporate sector spending to establish factory or purchase machinery. Those spending slightly increased and then is now above 2019 level. So overall, it's quite weak economies. Now let's look at the United States. I show you very similar chart, but you can see how dynamic U.S. economy is. So this is a US economy. Look at the scale, left-hand side. I show 85 to 125. Again, I show 2019. The US real GDP level is equal to 100. What you can see right now, as of 2025, this bold GDP line is well above 2019. So you can see during this period, although U.S. economy activity dropped in 2020, but recovered very fast, and economic growth is very fast. So now already their real GDP is well above 2019. If you look at the household consumption, also quite moving very fast and already quite well above 2019. The both consumption and capital spending. So going back to Japan, you can see Japan is quite sluggish, and then it just recently and reached the 2019 level. But the U.S. is much more dynamic, and economic growth is very high. Please bear this in your mind. Okay. Now I will explain you gradually what Japan Bank of Japan is doing, what U.S. Federal Reserve is doing. Okay. So when we talk about this kind of macroeconomy, there are three players. You already saw household. They are the one who consume goods and services, right? And they are the one who create demand and economic activity. And then there's a corporate sector who try to spend money for the capital spending, and they hire people and then they pay wages. So there are two key players. And then there will be government and central bank. The central bank conduct monetary policy. The government conduct fiscal policy. So now you saw the Japanese economy is quite weak and sluggish. The US economy is far more dynamic, right? So, but each country has its own program. So they try to deal with this economic issue through three structural policies. One is called monetary policy. The second one is fiscal policy. Monetary policy and fiscal policy are extremely important. What monetary policy does, the monetary policy is conducted by central bank, not the government, okay? And the central bank tries to adjust the interest rate and then try to control inflation, try to have a stable prices. Okay, that is the role of central bank. Now, the fiscal policy is conducted by the government. So they are the one who determine tax system, like consumption tax hike, corporate tax hike, or corporate tax cut, or income tax cut or income tax hike. They also determine government spending. If there are a lot of poor people, government provides some subsidy, and they provide subsidy for the government, for the companies, small, medium enterprises. So fiscal policy is determined by Parliament, Diet, Congress. So it's not determined by small group. It's determined, by the government, and then this the budget is determined by Congress and Parliament and Diet. The monetary policy is conducted by very small number of small group of people at the central bank. I was one of the monetary policy maker there. So on very small group of people, they are supposed to be independent, and then they usually stay at central bank, and they're the one who decide how much interest rate, what should be the interest rate. Okay, so central bank monetary policy is conducted by selected group of people, but the fiscal policy is going through many, a large number of people. It involves all departments, and also it involves politicians. And so you see the process to determine the economic policies are very different. Now there are one more important economic policy, which is structural reform. This is more like long-term policies. There are many things. It can be agricultural reform to increase Japanese agricultural production. It may be related to digitization of the economies. It can be deregulation, and there are many different kind of reform. For example, labor market reform, immigration policy, those things. So what I will explain you briefly today is monetary policy and fiscal policy. I don't have a lot of time, so I'll focus solely on the monetary policy and fiscal policy. Okay, so the time framework is different. The monetary policy is very short term. For example, next week, okay, next Wednesday, Federal Reserve, U.S. Central Bank will have a monetary policy meeting. They have a monetary policy meeting 8 times a year. And then, they get together at Washington, D.C. I believe it was 19 members, 19 members. It's called FOMC. And so they have this meeting 8 times a year. So one is next week. And they decide what should be the policy rate for, and then until next meeting. So on 8 times a year, so at each meeting, the central bank decide the level of policy, level of interest rate, which is level of interest rate until next meeting. So it's very short-term framework. I hope you understand. The fiscal policy is very different. Usually once a year. So right now, Japan is in the middle of a budget discussion. So in the case of Japan, the budgetary framework starts from April. So now, I think yesterday, the Takaichi's administration just passed the 2026 financial year budget. So it's usually 1 year. It's a very long-term span. But the monetary policy, usually interest rate is valid until next meeting. So it's very short term. The structural reform, as I said, it's a, labor market reform, agricultural reform. There are all sorts of reform. So it's a more long term. So I hope you understand, usually when we talk about economic recession, we are talking about, usually we are focusing on the monetary policy and fiscal policy. Okay, so just in case you may not be familiar with central bank. So central bank, every country has one central bank. So Japan has a Bank of Japan. US has Federal Reserve. Okay, and the Euro area in EU, they have a single currency called Euro. They have a regional one central bank called ECB, European Central Bank. But normally, each country has one central bank. This central bank serve for the economies. Their main role is to control interest rate. When I say interest rate, basically very short term. So in the case of Japan and US, what central bank decide at each meeting is overnight, very short term interest rate. So they look at the very short term interest rate, and once they set the interest rate, that influence on the bank lending rate, mortgage rate, etc. But what they decide is very short term interest rate. Why they do that? Because to keep inflation very stable. Usually we don't want to have a hyperinflation. We don't want to have a deflation. We like to have a reasonably, stable inflation. So that's why central bank try to control interest rate to achieve inflation, stable inflation. Okay. Yeah. So I don't want to talk too much, but that is the main reason. So if economy is weak, usually interest rate should go down. If inflation is very high, economy is too good, overheating, the central bank will raise interest rate. This is a basic fundamental. Okay, so this is a basic textbook style. Now let me start to explain about case of Japan. It's far more complicated than what textbooks say. Okay, first let's look at Japan's inflation. Japan had a sort of, low inflation for 20 years. But since in the second half of 2021, look at the blue line. This is Japan's inflation, okay, based on consumer price index. So inflation started to enter into positive territory. So you see inflation is above 0% since 2021, the second half of 2021. And Central bank usually set the inflation target, that is 2%. So over nearly 4 years, Japan's inflation was above 2%. So you see inflation was moving above 2%. So we entered into the inflationary period. But when you look at this very short-term interest rate, as I said, overnight, very short-term interest rate, this is the interest rate the Bank of Japan decide. Despite the inflation for nearly 4 years, Bank of Japan maintained very low interest rate, gradually started to increase. The latest policy rate is 0.75%. Why Japan, having inflation well above their inflation target of 2%, nearly 4 years, why Japan is not raising interest rate very quickly? Okay. Before I answer to this question, let's look at the US case. US is totally different. So US also started to have a very high inflation, especially year 2022. Inflation started to slow down, but still above 2% today. Okay, if we look at the blue line, 2026, January is the latest data, and above 2%. And then during this high inflationary period, the US Central Bank, Federal Reserve, raised policy rate. So you can see this red line started to increase from 2022 March, and interest rate went to above 5%, started to gradually slow down. But the latest policy rate is 3.5 to 3.75%. So I took the upper range, so 3.75%. The question is why the US is raising interest rate, okay, to cope with a high inflation, but why Japan is maintaining so low inflation despite the inflation? Do you know the answer? The answer is going back to the chart I showed you in the beginning. Because Japan's economy is so weak. Look at this, right? Only recently, the Japan's real GDP just achieved the 2019 level. So how weak Japan's economy is, right? Look at the US. The economy is growing so fast. So already 2025 level is well above 2019. So US economy is really strong. So despite the fact that the Japan and US have inflation, but Japan's inflation is nothing to do with strong economies. Japan's inflation is coming purely from cost push, we say. Cost push means it started in 2022 February when the Russia invaded Ukraine, and then commodity price started to pick up, right? So those are the commodity price induced inflation. But after that, Japan's inflation is coming from depreciation of Japanese yen. Okay, depreciation of Japanese yen means, let me check if I have data. Yeah, so let's look at left-hand side. This is a US dollar Japanese yen. So right now, since the Iran war started, US dollar is equal to 159, right? 159 yen. So it's very cheap Japanese yen. Look at this. So left-hand side. So yen used to be around 110 or 115 against US dollars, but started to depreciate very sharply. Okay, so now 159. So when yen depreciate so much, and Japan do not have a lot of resources, we buy a lot of energy, we buy a lot of agricultural product, almost all goods and services from the world. When yen becomes so cheap, everything becomes so expensive in Japan. Just $1 was used to be 110 and 159. So you can imagine everything becomes so expensive. So going back to the reason why Japan is having inflation, started with Ukraine fighting, but after that, because the yen started to depreciate, that created higher imported inflation. So that's the main reason why we had this persistent inflation for long. Okay, and so from central bank point of view, even inflation is very high. It's nothing to do with domestic strong economy. The domestic economy is so weak, but they want the Bank of Japan needed to support domestic economy, so they didn't raise interest rate. So I hope you understand. So Japan's economy is quite weak. So Bank of Japan maintain low interest rate, but because of that, ironically, you see the right-hand side, the interest rate differential, emerged. So this is a U.S. policy rate, as you already saw, red colored. The U.S. interest rate is much higher than Japan. So because of this interest differential, it also created substantial yen's depreciation. So people wonder, there's a two contrasted view. Some people say Japan's depreciation is so bad and it's creating cost push inflation. Why not Bank of Japan raise interest rate? But on the other hand, if the Japan starts to raise interest rate closer to the US level, what will happen to Japanese economy? Economy is so weak, right? A lot of people suffer from higher interest rate. So Japan is facing dilemma. This is what the complexity that we are having. Okay. So because I don't think we have much time, so let me quickly talk about Japan's fiscal policy. What's happening to fiscal policy? So Japan, I guess I don't have a lot of time, so let me explain. So Japan's debt, this is a public debt as a percent of GDP, it's about 240%. That is the biggest debt in the world. Okay, so Japan has so much government debt, okay, and slightly decline, but it's so big, okay. So the question is, some people say Japanese economy is so weak, so government should spend more money, do more tax cut, and try to support consumption and corporate sector. But I hope you understand this. The biggest problem here. So the problem is that the Japanese government bond is issued quite a lot every year. And this is a total Japanese government issuance, this shaded area. The new issuance plus refinance means Japan has so much debt, and then every year they cannot pay a lot of principal. So they refinance the JGB. So it's a huge amount, 180 trillion yen. So because of that, how to say, people say that Japan should spend more, more support and more expansion in fiscal policy. But if government starts to do more tax cut and more expenditure for household and corporate sector, then the government has to issue more Japanese government bond. And if that happens, then who will buy? Who will buy the Japanese government bond? That is a problem. Look at this. Finally, this is a long-term interest rate. The previously I showed very short-term interest rate decided by central bank. This is a government bond interest rate. It's a rising trend. Why this is rising trend? One is because Bank of Japan is no longer buying Japanese government bond. And number two, because people are worried about Takaichi's fiscal policy, market think that, Takaichi used to say she is going to do more expansionary policy. So market, reflected those concerns. So if the government will issue more Japanese government bond, and then, it will be more issuance in the market compared to the demand from investors. So supply demand imbalance creates lower decline in JGB prices, which means higher yield. So because of that, government cannot do a lot of expansionary policy. Once they do that, yield go up. And then, if the yield interest rate go up, then mortgage and a lot of interest rate go up. So there's a dilemma again. The government is hoping to do a more expansionary policy to support public, but they cannot do much because of this constraint pressure by market. This is, I hope it's very complicated. I hope you understand. But maybe you can try to ask me question. This is what's happening right now. It's highly complex, but if you have question, please ask me. Yeah,
All right. Thank you so much, Dr. Shirai.
yeah.
Um, so we do have one question in the chat that was sent previously. I'll read it out loud, and if anyone else wants to ask questions, please raise your hand and we'll call you in order. The first question from Rita is,
Uh-huh.
we have shortly touched on upon set of the current political situation. Do you, Professor Shirai, have advice in which industry we should invest, be more independent from these political changes?
I see. So Takaichi and also previous, previous prime ministers, they always mention sort of a crisis management investment is important, right? Because there is a, geopolitical tension between US and China. And then we are depending so much on the China's, precious metal, critical metal, right? And then I think, US and Japan and Western countries, they try to de-risk. We say de-risking. Okay, so Japan want to promote semiconductor, AI, and some, especially AI sectors and electricity sectors is very important. So Takaichi-san also suggesting, she will spend, money for that. Okay, but I think the problem in Japan, so government try to, increase this semiconductor and the AI industry. And are you familiar with, for example, in Kumamoto, they attracted Taiwanese chip maker TSMC. And also in Hokkaido, there's a Rapidas, which was created by Japanese various company with the technology support from IBM. It's called Rapidas. They are the chip makers. Okay, and then there are also certain semiconductor machinery and chemical industry, which are very good. However, in the case of Japan, I think, government try to increase the supply of those sectors, but the demand is not enough. In order to create demand for the
Mm.
semiconductor, we need to really digitalize our economies. If you look at the Japanese government, it's not digitalized. Still lots of paper and, the government have to be more efficient and then digitalize. For example, if government want to provide subsidy, everything should be, digitalized, and then also our tax payment should be digitalized, social security data, tax data, all those data should be integrated so that we can have a more efficient policy. But Japan is really slow in terms of digitization. Actually, Korea is far more advanced in terms of digital government. And also in terms of digital payment, Japan is quite slow. For example, right now, if you look at India and ASEAN countries, they are now connected to each other. But Japan, we have a fragmented QR code and fast payment system. So very difficult to connect with India and ASEAN. So it's very, fragmented and legacy in Japan. So I think we really need to, have a more broad-minded, and so make more digitalized economy to create demand for AI and semiconductor. Also try to be more open, try to integrate our system with regional economies. That is important. I hope Prime Minister Takaichi-san will understand this.
Thank you so much. Um, are there okay. So it
Ah,
seems like some people can't use their audio. The first question is, did Israel fight affect Japan GDP?
yes. So you know what's happened? So February 28th, right? US and Israel attacked Iran. Before that, oil prices were at around 60, right? Now nearly 100. Yesterday 100. And around, so it's extremely high, right? So if this continue, because these Straits of Hormuz, Japan import 90% of oil from Middle East. You can imagine if this continue, okay? Gasoline price is already high, okay? So inflation starts to peak. And because 90% of oil come from Middle East, of course there are some reserve, but, this create concern. And also prices are already going up. If this situation continue, it's a bit deflationary. So some like Japanese manufacturers, they depend a lot on oil. So this will influence their economic activity. So if this continue, and say if the oil price go well above 100 and stays there for many months, this will certainly damage not only Japanese economy, but whole Asia. Because India and many Asian countries, they depend on the Middle East energy. So we have to see what will happen. So anyway, if this will continue, the fight continue, and very risky to import from those regions. Certainly, it will influence not only Japan but Asian economy and also U.S. too. Even U.S. they produce oil and gas, but prices are set internationally. So that's why now U.S. gasoline price is going up. So they cannot escape. All these prices are determined internationally.
Thank you so much. Um, Next question is, I
Mm.
wonder, did the US and Israel affect the GDP in Japan for
That
Asian
I already
countries?
answered.
Yeah, yeah,
Yeah.
yeah.
Uh,
So what industries and stocks in Japan are US and least affected by the politics over the SPX?
Okay, right now, okay, if you look at the stock prices, okay, so compared before February 28th and the latest Friday, stock prices in Asia, the Korea's stock prices lost by 12%. That was a very big deep cut. Followed by Japan. Japan, the stock prices, whole stock prices dropped by 8%. US stock prices dropped only by 4%. Okay. So you can see US stock prices, the drop is much smaller. Why? Because they have oil and gas. But Japan and Korea, we import almost all from Middle East. This fragility is reflected in the this different pattern of stock price development. One more issue, going back to exchange rate. Okay, Japan's yen is even more depreciating now since this February 28th. So as Korean won. U.S. stock price, sorry, U.S. exchange rate appreciated actually. So when this kind of emergency issue happen, everybody want to buy US dollars. So Japanese yen depreciating, people selling, right? Korean won is sold in Indian rupee, all currencies depreciating. US exchange rate appreciating. Okay, so to answer to your question, the impact on the U.S. is on average in terms of stock price is much smaller compared to Japan. By the way, China also very little affected. If you look at the China's Shanghai stock price, just dropped by 2%. And also very little movement in terms of exchange rate. Why China is different? Because China is diversifying their resources, right? And they also depend on Russia. We depend on Russia, but cannot too much, right? Because there's a sanction there. But China, Russia, they are allied. So because of that, so you have to look at who are affected most, who are importing energy from Middle East. That's all affect exchange rate and stock prices.
Thank you. Um, Dr. Shirai, are you okay on time to answer?
Yeah, yeah, it's okay. I'm happy to
All
answer. Yeah.
right, thank you so much.
Mm.
When the fight or war between countries happens, does the economy or of a country downgrade or upgrade, or is it depending on the country or region?
You mean downgrade, upgrade, credit rating?
I believe it means the economy downgrades or upgrades
Uh,
overall.
okay, so usually we use downgrading or upgrading for the credit rating of the
Mm-hmm.
country. For example, if Japan issue government bond, those government bond, actually assessed by credit rating agency like S&P, Fitch, Moody's. Okay, I think what that is what I mean. Okay, I think this doesn't affect the credit rating anytime soon because right now this fighting, we don't know how long it will continue, right? So what will happen is that if this situation continue for long, like 1 year or so, okay, and the government have to spend more money to support the economy. So government will start to issue more debt. okay, then if that debt is not so sustainable, the credit rating agency would downgrade. By the way, Japan's credit rating is only single A. It's not very good. Okay,
Hmm.
like Germany or Singapore, triple A, right? So triple A is the safest. But so just by this fighting, it doesn't affect credit rating anytime soon.
Thank you. How do you view the renewable energy sector?
Ah, so after all, fossil fuel create a lot of carbon dioxide. We know that, right? So eventually we need to move to low carbon energy, which is renewable energy like wind power, solar power, tide, thermal power, etc. I think eventually we need to move to renewable energy, because fossil fuel, it's global warming. It's very clear, right? If you go to Southeast Asia, they are suffering from flood, climate change driven flood. So we have to move to. But at this moment, it's not so simple because you need technology and but I think you young guys, you should spend more time to think about how to move our energy to the more low carbon energy economies. That is a lesson. After all, we have to move away from this fossil fuel energies.
Hmm. Um, Another question we have from Zvinka is in this time, how do you know when to buy or sell a stock?
Okay, so right now it's not very good time, but at the same time, it may be good time for you to buy, right? Because before US stock prices, Japanese stock prices was overvalued. Everybody knew it. But in the case of US, thanks to this magnificent seven, big tech, and they are doing, it's an AI boom. So, driven by those technology companies, the stock prices are very high. And so when prices go down, it may be good time for you to buy. But you have to be careful because you don't know what will happen to stock prices. So you buy today, but maybe tomorrow or 1 month after, stock price may go down even more, right? So you may lose. So this is no easy thing, but always try to find time. A good timing is you should buy stocks when prices are lower. Okay.
Hmm.
So it's very difficult to answer, but you have to be wise. You have to understand, whether the prices are overpriced or and what will happen to AI boom, and then what's happened to US dynamism, their competitiveness. So you got to study this.
Thank you. Another question we have is how can Japan sustain a debt to GDP ratio over
Mm.
250%?
Yeah. So what I will say, it's not sustainable in the end, but it's sustainable for a while. Why? Because 90% of Japanese debt, just 250% debt, is owned domestically. Japan is very lucky. Other countries, when they issue government bond, some government bond, they have to get the money from abroad. Okay, so for example, in the case of US is the biggest economy in the, probably safest economy. That's why everybody want to get to US dollars. But around 40% of US government bond is owned by foreigner. So it means the bond prices become very subject to the sentiment, investor sentiment, right? Foreign investors are always moving around. But in the case of Japan, 90% of Japanese government debt is owned domestically, including Bank of Japan. So in that sense, we are less sensitive to foreign investor sentiment. Okay, so in that sense, I would say it's for a while it's okay. We will not have any sign of debt crisis, but sooner or later we have to deal with this big debt. Okay, but it's not an anytime soon issue.
Thank you. I actually have a question from
Yeah.
myself as well. We do have a question on chat, but I would like to ask it
Mm,
to you if possible.
mm,
Um, so I live in Japan, and I've seen such big fame for Takaichi Naikaku, and over two-thirds of the party has taken over.
Yeah.
And however, as expert from you, you do have some critiques about her financial decision for Japan, right? But in an era where there's so much rising fame and where there's so much tension between the
Mhm.
actual government and the Bank of Japan itself, like what is the media or what is the experts' job to inform the Japanese citizens about this? How should we do this?
Okay, by the way, I'm neutral.
Mm-hmm.
In Japan actually divided. For example, in terms of monetary policy, Bank of Japan tried to normalize interest rate gradually. Okay,
Mm-hmm.
but there are certain economists called reflationists who are surrounding Takaichi-san. They prefer a low interest rate. Okay, so monetary policy completely divided, polarized. Fiscal policy also polarized. The people, staying around Takagi-san is economist, okay? They are very, they are pushing for expansionary fiscal policy, but there are a large group of experts who are worried about Japan debt. Right now, it looks okay, but it's not sustainable. So we cannot, have to be very wise. So it's polarized. Okay. But let me explain you. Because you are young people, I will explain you what's happened. So, on February 8th, there's a election and she had a great victory, right? But the way she conveyed message is, I think, different from what she's doing right now. Okay, because I talk with a lot of foreign investors recently, also this month, and also I talk with a lot of Japanese public. The people understood the way Takaichi-san explained during the election campaign. She gave expectation, that she is going to do a lot of expansionary fiscal policy, like more tax cut, reduce more burden for the low income people. And she said, fiscal discipline era is ended. That is what she said. So people
Mm-hmm.
thought she's going to do very, very, lots of expansionary policy. She doesn't care much about JGB. I think that is the young people understood that way. Am I
Yeah.
right? Like, and
Yes.
I hear the same story from foreigners, okay?
That's
Professional
exactly
investors.
what
Yeah.
everyone understood, I
But
believe. Yeah.
what she say right now, okay? What she's doing right now, what Minister of Finance is saying in her speech, no remark that expansionary fiscal policy will do, and they are going to do more, this end of this, fiscal discipline, era is over. Never say that. If you look at the government meeting right now, there was like a
Mhm.
国民会議, and then they are discussing about, lowering food consumption food consumption tax rate from 8 to 0, right? But it looks like it's getting now harder.
Oh.
Because within LDP, there is divide, people who are not supporting this idea. So foreign, investors said, they look so puzzled when I explained that. And they said, why? She had a big victory, right? She can move fast, right? But
Hmm.
so people say, what's the point of just having meeting? I mean, she already said she's going to, she's committed to this food, 0% food, consumption tax rate, as a consumption tax rate for 2 years. And she's going to do it without depending on the Japanese government bond. That is what she said repeatedly, right? If she's already saying that, what's the point of having meeting? Because at the
Hmm.
meeting, opposition parties are expressing, different view. So she could move fast, right? But she
Yeah.
didn't do it. So she's having this meeting, and then different view are already raised. And then within LDP, it's completely divided. So it appears now that she may not do it.
Hmm.
So when I explain that, and also, if you look at 2026 budget starting from April, look at their legislation. They clearly said, this is a little bit um, technical issue, but that that legislation said we are emphasizing physical discipline. Primary balance is in surplus. That is
Uh,
completely opposite from what she used to say.
mhm.
So, right? So if we look at this 2026 budget, and also Prime Minister, I mean, sorry, Minister of Finance also said the same thing. If we look at her speech, she all talk about, she said she is not hinting anything about expansionary fiscal policy. So, looking at what she's doing right now, and, all this, information is suggesting she's not going to do expansionary fiscal policy. So when I explained that to the foreign investors, they were so surprised. So I think we look at carefully what they are doing. You young people, you should know. There are a
Mhm.
lot of information, but um, it looks like she's having difficulty to do it.
Yeah.
So I don't know, is it going to be disappointment to you, or in another word, I talked about long-term interest rate. Japan has constraint. It's not easy. We cannot do a lot of fiscal policy because of the interest rate issue. The central bank also very, very stuck. It's very difficult to move. If they increase interest rate, it may help to appreciate yen, but
Mhm.
it damage Japanese economy. So dilemma. The same thing for the government. So, but the way Takaichi-san talked during election campaign probably created a lot of expectation, but it seems to me that right now what she's doing is very different from the expectation people got.
Yes, yeah, I agree with you. I expected the 2-year experimental, like the 8% to 0%,
Hmm.
um, to be set in place at like as almost as soon as she gets in
Yeah,
the government. But it's sort of, also Minister Katayama Satsuki is
yeah,
also, she's not hinting anything about
no,
that even at the World Economic Forum and anything there.
yeah,
So
exactly.
that's what I was yeah.
So
I'm
I'm
glad that,
wondering,
yeah.
yeah, so, what will happen to this high expectation created? Can you answer to me? These young people thought,
Hmm.
okay, she's going to change the world,
Yeah.
right? I mean, what will happen to this high expectation?
I think the JNN does like a monthly researches about the how young people are supporting or not. I believe it's still very high, right? However, I think once it keeps on getting delayed over the months and the people will slowly start to lose um their expectations and their hopes that Takaichi will actually, Prime Minister Takaichi will actually be successful in what she said originally. So I think that's a dangerous. However, I think since she has this fame from being the first woman prime minister and sort of reviving the LDP from the previous prime minister, I think that just carries her fame quite a bit, which is not idealistic when it comes to actually having new policies pushed forward. But I think we're in this like weird position right now. Yeah.
It looks at the end, there will be not much difference
Hmm.
from
Yeah.
previous. But, I think as a neutral, person, I already knew
Hmm.
because we already know all constraint. But I
Hmm.
guess the communication created a lot of, perception, differences. I don't know what will happen, but, to me, I saw that she can move fast. But
Hmm.
she's delaying. If delaying, then it's much harder now. So,
Hmm.
yeah.
Do you think she has everything she needs to push forward if she has to?
Looks like within LDP, it's polarized, I
Mm.
think. But she knew it, right? But then she's committed to that.
Hmm.
So I think, eventually people will understand. But then if it's not so different, and so what I hear right now, so probably very difficult to do the. I might be wrong. Okay, I was talking with some journalist, and
Hmm.
so if she's not going to lower the food consumption tax rate. Then, she might do some transfer, but that's nothing to do. That's a thing. That's what Ishiba-san and, Kishida-san used to do. Maybe
Yeah.
under different name, but the structure is same. But then what the point?
hmm Yeah.
So you have to check. You are young people. You have to check. You have to judge. Okay.
hmm
So a lot of people already, who are familiar with Japan's state situation already knew it. But I think the way she communicated created a big expectation. So I don't know what will happen. But you as a young people, you have to make a decision.
hmm
Whether your judgment was correct. If or maybe you didn't, you young people could have checked like constraint, but maybe you have to also think about your assessment. What are you going to do if the in the end it's not so different from previous minister?
hmm
What will be your action? And also you have to think about it by yourself.
Thank you so much. Yeah, I've always wanted to ask someone like an expert like you about these questions. So,
So by the way, you can also look at LinkedIn. It's
hmm
called LinkedIn. You can also see, my information there. I have
sorry, I think she glitched out a little bit, right?
occasionally, but the LinkedIn, I'm okay.
Oh, sorry.
Okay.
Sorry, I couldn't hear you for a second.
So you can look at LinkedIn. Do you know
hmm
LinkedIn?
Yes, I have you
Yeah.
connected on
So
LinkedIn.
you can look at my post.
hmm
I give a more frequent an update, and occasionally I explain my view. So you can,
hmm
it's all in English, so you can look at LinkedIn. Yeah.
Thank you so much.
hmm
I think we have one last question from
Oh,
one of
okay.
the
Last question, okay?
yeah.
Yeah.
So what is the impact of the weak on yen on
hmm
GDP?
Yeah, here is a challenge. So yen depreciate, it becomes very weak, right? So positive side, foreigners started to come to Japan because everything is much cheaper. Very clear. Yen's depreciation is boosting the tourism sector in Japan. Because yen is so cheap, if we have foreign asset, converting into Japanese yen, it's much bigger. Okay, that's good thing. And because yen is cheap, the Japanese automobile exporters they benefit. Okay, but in the end, if you look at the whole economy, because of the yen is cheap, we have to buy a lot of goods and services. Imported prices are very high. Consumers suffer, and small medium enterprises also suffer. So, I think overall, this extremely cheap, weak Japanese yen has damaged Japanese economy.
All right, I
Okay,
think that answered everyone's questions. Yep.
okay. So good luck on your study.
Yep. Thank you
Thank you.
so
Bye.
much.